Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for June 12th, 2024. I'm going to zoom in and take a look at some of the daily trade and daily reports. Always remembering that that's part of the longer term trading that we do for swing trading and position trading, and then the full management of all those systems under one consistent discipline. I want to start with just a quick commentary on the big gap trade this morning in SPY. Some of our pro traders who trade pretty large position sizes in the S&P were taking a look at this, and so I wanted to illustrate what that trade looks like for them. So I'm looking at 1 minute charts here. And for scale purposes, what I'm showing is the first 3 minutes of the market look like this. And this right here was the 3 minute bar high. And then I converted the rest, so there were 3 bars over in here. And then this was the 3 minute bar high, and it sold off. Now, these are all 1 minute bars through here. So you get this climbing the little ladder here, and you get the OR3 breakout right here. And then the R5 initial stop is equal to 60 cents. And then the first move, if you're managing it off the ones, you'd be justified in taking that exit. So you get from about 55.41.70 to 542.60. So that's 90 cents on a 60-cent risk. So that's a 1.5 R trade so far. Check or hold. And that's nothing more than just that initial OR3 breakout, and then taking the dragon on the ones or the PSAR on the ones as a reasonable way to get that thing started, because this was a huge gap. So we want to lock in that volatility, because it could just as easily go like that. So we just cut it at the logical stop right there. And then it monkeys around. It's holding support at the PSAR. Doesn't, after it reverses, it doesn't even make a new low in here. The PSAR declines. It flips right here. We wait and see till the RL10 comes out of the dragon and gives us an emerging dragon. And then I'm going to use that same 60-cent risk box. And this thing moves in our favor. When you see it get even that far, your stop should already be from here up into here. And you can trail that with the PSAR all the way to here. And if you do that, you get the first leg, pause, second leg, and now the RL10 has rolled over, and you see the RL30 rolling over. That's an owl signal that says that's enough. So you get a move from about 542, call that 90, to 543.75. That's an 85-cent move. Divided by 60, that's about 1.4. So within the first 60 minutes, you've made $1.75. 1 penny on the futures E-mini is equal to $10. So on a single contract, Single contract, you've made 1750. Our pro traders are trading between 10 and 500 contracts on SPX. So I'll let you do the math on that. So you wouldn't be wrong to give yourself a gold star and go play golf. But that's what 3R looks like in the morning. All right, we're going to shift to a couple other sniper trades of the day in the usual way. And we're using 10-minute charts on this one so that we can look at multiple signals. This is NVIDIA on 10 minutes. Why? Because that's been one of our focus stocks ever since the split. And here was the close. And here was the gap up. And this is the R5 bracket, the R10 bracket, excuse me. The total risk box that we're going to use on this breakout is the R10, but we get into it because it's an R5 bracket, which means that we're willing to get long on the breakout above the RL, the opening range 10, and we're ready to get short here on it to play for a retracement trade. Now, in this case, I'm using the full R10. You wouldn't be wrong to use just a smaller risk, but why not? I'm using the R10 because we're on the 10-minute. So that's our entry. Check or hold? It moves immediately in our favor. By this time, here's our stop. By this time, your stop should be here. It wouldn't be wrong to follow the VWAP. And then when you see this big move, which closes here and then opens here, what I like to do is just split that and keep half of the gift bar. I treat that one as the gift bar. So I want to keep half, and I'll just jump stop to here. That's a technique that would allow you on 1 unit of risk to lock in, 2.5 R, meaning for every $100 of risk that you took on, 50 cents, for every $100 that you risk, you're at plus 250 in your account. I end up taking this exit. So it runs, the next bar, it runs up to here. And I move my jump stop from here up to the low of that bar. And when this rolls over, I'm happy to take that one, and that locks in 3R. Check or hold? Pot of 2. So I'm sitting on my hands here. The R10 rolled over. I'm interested to see what it's going to do. When it rolls over to here, my new channel has a low level of here and an upper level of here. This is nice. as the lower limit because the intraday VWAP is also right there. So as long as price is north of this VWAP, I am allowed to have a positive bias. So I end up taking this trade when the R10 powers through the dragon. Now I have the regression line crossing the dragon. And I take the same size risk box that I used here. So I have a standard position size with an entry right here. Check or hold. Now, what I'm interested is seeing price get through this upper limit. This is the peak of the RL10. So all of the move from here to here is in tactical space, meaning that it's just starting to move out. And it's not until price gets above this price level that I have new information that the trend is continuing. So inside the tactical space, the only thing I have to do, the only mission that I have is to get my stop above my entry so that I can lock in this little wedge. And then that becomes my worst possible outcome, no lose plus dinner for two. That psychological state of being able to convert my initial risk to capital to a small but meaningful win creates the disinterested mentality that allows me to treat the rest of the trade as a science project. And then I can just follow the rules. I don't have to put any preconceived notions on it. I can simply adjust my stops according to my rules. That's what I'm trying to do in the tactical space. That is from any move after my entry until it breaks above the previous peak of the RL10. Check or hold. It does nothing for 5 bars. That's almost an hour. It does nothing. And we're just getting through the lunch period. And the R10 is starting to roll over and the PSAR is declining. This looks like dead money. And I'm trying to preserve my 3R. So I just scratch it. Check or hold. It's supposed to work right away. And it closes. So we bring home 3R in NVIDIA today. Next sniper trade of the day. Oops, that's NVIDIA again. Sorry. Sorry, I thought I had DIA up. Just a moment. I appreciate your patience. I will try to come back to that one later. Thought I had that up. Okay, well, we'll just stay with those two. All right, let's go shift to the traders. All right, he's working DIA in 10 minutes. A couple quick scratches. He gets a line. He doesn't take the re-entry, but he does come in with a 0.1 for the day on that one. The re-entry would have paid handsomely. Minus 0.7 on EWW. I like that he gets aligned here. The quick reverse, quick cut, re-entry, a couple bad lucks. Does get re-entered here, correct? I might have taken this one on the short side simply because we're stuck at the high of the day and the move has been down. This would be a cotta 2 to the downside. We might have gotten a little earlier entry than although I like this one because it's breaking the VWAP. That's still fine. He gets 1.2 in EWZ, so he's got a positive day. Gets paid, gets paid, gets paid. Micro loss does not take that one because I think he wants to confirm a winning day at 1.2. Trusting himself in his re-entries. This was very calm. This was a good day. Good day at work. Here's Joe. $4.8. Yeah, I guess I didn't want to show the other one, just not to steal your thunder here. Now this is plus almost +5 on this entry and exit, and then this collapsing dragon and cotta 2 to here, and that's not even getting this move. So this could have very easily have been 8, but there's no room for improvement from my coaching right here. That's a perfect entry at the skin of the dragon, crossing the VWAP and nails the exit, and then has the presence of mind to shift orientation down to this side, and it comes right back to the support level. That's 5R, and well done. George brings home 0.5 on EWW as well. He gets that initial move and then cuts that loss quickly for 0.5 and brings an additional 0.6 out of DIA. He gets paid on the short, cuts the loss on this one. This was a stop and reverse that exited here for 1.3. Oh, actually, a little bit later in the day for 1.3, and he nets 0.6. So another strong day for George. Everything looking good. We'll consult the daily reports now. So the 150-day look back, we still remain in fireworks condition with the market making another gap up and new highs today. No resistance overhead, but nevertheless a tactical trade each and every day. What with the world being as it is. On the 30-day look back, so these are all daily bars, you got the 3-day anchored VWAP is now leading the way. The 5-day has curled up. The 10-day is showing real strength. The 30-day anchored VWAP showing real strength. You have a long-term support from here. We got the breakout above the stop here. That makes this an emerging dragon and going, and everything's looking good here. You can see on the 30-minute chart, this is 30-minute bars, that's 5 days and 10 days. That was the previous support level. That was the emerging dragon breakout. This is the new current support at the bottom of the PSAR flip. 4 days of consolidation and a big break on the Fed reaction today. And this is still looking good. In my view, you don't want to let it go back below 538. I might give it that little bit of wiggle room. If you use the low of the day, or the low of the day here at 540, I could live with that too. I can live with 538 or 540 to lock in this and say, look, let's go. Because if this doesn't work and it fails back into here, now you have to treat this as a consolidation zone and strong support here. And I would rather not let it come all the way back into here before I bail. I want to just lock in I want to lock in all the gains that were made as part of that breakout. That's why to me 538 is key, even 540 for even a more aggressive stop. Pure psychological management there. Strong overbought conditions, favorable volatility. It's supporting a long side continuation. You've got Europe in a buy on dip in the overreaction system. That's where you have a strong move up, an adverse gap down, and then an opportunity to get it on sale as it rushes up to rejoin the previous trend line. That's what the overreaction trade looks like. Dashboard 1, only a few mechanical swings. You had real strength in Apple continuing up 3.5%. Real strength in Microsoft. That was up 1.64, but that is really strong tech leader. And NVIDIA and Tesla. So tech is fully in charge right now. Tesla, NVIDIA, Microsoft, Apple, they have now taken over this as strength leaders in the market. The other sectors brought it back to the height, and now tech has taken over. Very strong showing from Microsoft today. In the ETFs, continued weakness here in Brazil and Mexico and Latin America. Strength here in the Qs and SPY and the S&P Tech XLK. That's pretty good. All systems normal. A handful of auto framers. The one that continues to intrigue me is McDonald's. We're going to see that was it's a 2.2 auto framer, and it's also one of the squeezes near the top of the squeeze list. When I say near the top, I mean at the top. It's a 1.9 on the squeeze. So that's pretty good. And this one, a auto framer and a squeeze in Cisco for if you're thinking about a tech laggard. I like that Tesla and the Qs are pretty close to the top of the squeeze list. So that's all good. Lots in the auto framer to choose from. I'm liking our little industrial combo here. Cliff, Caterpillar, and Alcoa. I'm always liking it when they are better than 3-1 on the auto framer reward to risk. regional banks. And Ethereum has had some good news about potential changes in exposure to that sector with an ETF. So I'm liking its potential. And it was up 1.4% today and is still 2.5 to 1. So you're getting second day momentum on that one. And McDonald's, I like it at 2.4 to 1 whenever it's on sale. We have a good mix between summer and winter. This is the haves and the have-nots. And again, you can see that tech is really in charge here in the summer. The large caps, XLK, and the Qs. And then your names in the summer over here that are in tech: Apple, Microsoft. Hard to argue with those. Amazon making a recovery in the spring. IBM and Intel trying to get on board with the tech leadership, but that's your tech leaders right there. Apple and Microsoft. Trading value, the ones that have the best combination of large range percentages and consistency: marijuana, Tesla, clean energy, NVIDIA, Intel, even Goldman Sachs. Hard to argue there. And Brazil's close. We have a nice positive 30 RL slope with price above the break. The slope is not exaggeratedly strong. It's still within that yellow box of plus and minus one. This could be like a Kata 2. So this is well within reason. It has cooled off enough. This was a cooling sideways motion that now supports the next leg up. It's important that it did not fail during that period. The slight pullback was immediately recovered. So that's a very healthy sign for continuation trades. And I think that's everything we got for tonight. All right, we'll get this published and posted, and we'll get after it again tomorrow. Take good care.